Hello everyone, how's it going? João here, and in today's video, I'm going to share 4 things that I particularly like a lot and I think are also very interesting to share with you. These are techniques and tools that I've learned over many years in the financial market. But here, I want to bring a specific view for Bitcoin. And you can also use these techniques for any altcoin. The first thing I'm going to talk about is Bitcoin's fractal cycle. Yes, that very one, which many say has an intriguing 4-year cycle. And we have some charts to go over and do a deeper analysis on this. After that, I want to talk a bit about institutional analysis, identifying it visually based on accumulation and distribution theory, and how this can be a game changer when you're making short, medium, and long term decisions. But just doing institutional analysis isn't worth much. It can help you in your decision making so you don't make decisions based on emotions, but rather from a more rational side. Making decisions based on emotions is a big problem because the chance of you hitting a stop loss and getting hurt in the market is very high. So, to help with that, we can complement this analysis by understanding buying pressure and selling pressure. And in the crypto market, this is very interesting because the crypto market is in information. Most exchanges offer a lot of interesting data from which we can create excellent estimates. However, identifying buying and selling pressure isn't enough. We need to understand where the key levels are, where these traders are going to get liquidated. So I'm going to show you how I identify the liquidation levels. It's very important because you get a much deeper view. And all of this that I'm going to mention is closely linked to the decision making of large funds, big market players, also known as whales. They aren't worried about conventional technical analysis. They want to know where the liquidity is for the market to move. Starting this video right off with the fractal chart. It's information indeed that intrigues many market analysts. Over the years, I started identifying that Bitcoin repeated certain patterns, especially patterns in time. And that's when in 2021 I wrote an article describing this fractal cycle. This Bitcoin fractal cycle started getting more interesting from 2015 onwards. Basically, Bitcoin goes through an accumulation phase, then a markup phase, which is the start of the uptrend, then a distribution phase, which is the end of the uptrend. In some cases, we can see V-shaped tops or sideways tops. What I'm talking about here will emphasize the next topic I'm going to mention. But continuing with this chart, let's see. Here, we can clearly identify that Bitcoin went through 3 major stages before starting a bear market. But curiously, the duration of this bear market is the same duration as the bear market of the 2022 cycle. And if we zoom in closer here, you notice that all of these three phases also repeated here. In 2025, many people didn't believe this would repeat, and it did. Now Bitcoin is going through a 1-year bear market decline. And this is quite curious because I confess it's a bit hard to accept, but over time I accepted it easily and understood that Bitcoin respects these cycles very well, these cycles over the last 10 years. So it's something for us to observe since we are in a bear market phase. But to understand a bit more, I like to make an association with institutional analysis. I'll bring up here, for example, an analysis by Richard Wyckoff, which I really like. After I learned a bit more about the analysis of theory, Richard Wyckoff's theories, I started making money, to be quite honest. Because the problem with the market isn't just being long or short. You have to identify the regions that are most opportune for entries and exits. And this theory is quite curious because it goes through an accumulation region, a reaccumulation region, and a distribution region. After the market moves into a distribution region, we start to see a redistribution region, and the cycle repeats with an accumulation region. And I want to show you here that this has happened throughout Bitcoin's history. As an example, I want to bring up here what happened in 2021, 2022. I can easily identify that this region is very similar to the accumulation region. See that Bitcoin moved into a reaccumulation region, and up here it distributed, breaking the previous all-time high. And that's something I want to talk about more soon. Notice that it also went through these same stages. Then it redistributed. I can easily see a redistribution. And further ahead, I can see an accumulation, which is probably this region. And it's not being much different what we're seeing now in Bitcoin. Look how curious, we see a distribution process. For me, it's this region. And we're going through stages of that repeat. So Bitcoin is probably in an accumulation region right now. And this works across various time frames, which I can also associate with the fractal theory from the first chart I had mentioned. Fractal theory is quite curious because we can see repetition in smaller time frames as well. In this case, I'm looking at the 5-minute time frame. So fractal theory is very powerful in the mathematical analysis of financial assets. Because yes, the market starts to have repetitive behaviors. And we can easily see this in various price regions. So I can see that here is an accumulation. I can see that here is a reaccumulation. I can see that here is a distribution, meaning the market keeps repeating these cycles. So this is very interesting for making decisions not based on emotion, but on logical reason. For me, this was very important, I think. we can use this for various decision making, whether in Bitcoin or altcoins. But the big question that remains is where to identify how far the price can go. But before that, I want to bring up a very interesting chart that we developed within all Fractal, which is the buy-sell pressure delta. It estimates buying and selling pressure very well across various exchanges in a ratio of positive and negative values. You can select various time frames, but here I want to bring up the daily time frame itself to bring a broader market perspective. Notice that in an uptrend, buying pressure is quite dominant. But when it turns red, it means that in that situation, the market is suffering very strong selling pressure. But since Bitcoin was in a reaccumulation phase here, the selling pressure wasn't very strong. It was just a testing moment for a subsequent uptrend. But what catches my attention is that these green peaks are smaller than the other. It's a sign that over time, Bitcoin was losing buying strength. A clear sign of increasing supply. Demand was falling and supply was increasing. So the price stops having those parabolic rises. Those parabolic rises cease to exist. The market starts to get more fragile. It distributes, and a downtrend begins. And the strength of the bears starts to be greater. So selling pressure literally starts to dominate the market. Currently, Bitcoin is going through another strong selling process, very strong pressure. But going back here to the first chart, I want to show something very interesting, which is the identification of traps, which is also linked to institutional analysis. Throughout 2025 until 2026, at the current moment I'm recording this video, I can observe several channels occurring in Bitcoin. These sideways channels are typical of accumulation and distribution regions. And they are interesting for us to make slightly more accurate decisions. Encourage yourself to start drawing trend lines, creating channels to combine with institutional analysis. And what I want to draw your attention to here is nothing other than these fake outs that happen. These fake outs happen in a search for liquidity. See that these fake outs happen quickly and the trend continues. More recently, here in May, a major fake out occurred. So I'm combining fractal theory, institutional analysis, identifying that there were several traps along the way. But the question remains, how to identify these traps? And for this case, I like to bring up the liquidation levels chart, where this chart of ours analyzes 30 exchanges. And look how curious. Here, basically, when Bitcoin was trading in January 2026, a large pool of liquidations was forming below. Look what happens to the price right after. It starts liquidating these traders. And down here, we can clearly see what happened to the accumulated positions. There in early 2026, a large concentration of longs dominated the market. Then these traders were forced to close their positions. When shorts became dominant, we can see it better even in this bottom part, right? Which is net longs minus shorts. Notice that the price starts to go sideways, meaning it stops falling. And then it goes sideways and forms new pools of liquidations, both above and below. And it quickly goes after these pools, liquidating both traders in short positions and traders in long positions. If you don't identify these regions clearly in the market, you will probably get very frustrated. And here in our liquidation levels, you can see from the 12-hour chart up to the last 6 years of history. And we're going to do some analysis here. The first one I want to start with is seeing what happened to Bitcoin in the last year. In the last year, it was very clear what happened to Bitcoin. Notice that from October to November, people's sentiment was very bullish. However, this chart already made it very clear what was happening. Bitcoin comes, it makes fake threats that it's going to fall. It hunts for residual liquidity from short positions valued at 1.2 billion, $1 billion. And next, it comes quickly and liquidates these traders. And it's curious that after liquidating these traders, many start to have the conviction, wow, it liquidated many traders, it's probably going to bottom out. But in reality, Bitcoin is doing nothing more, nothing less than being in a distribution phase, which I mentioned earlier in the chart here. It was doing this stage. It falls, it tests a region, and then the downtrend continues. It's quite discouraging, but here supply was already much greater than demand. And what happens? The market enters a very aggressive downtrend, liquidating these traders. After liquidating these traders, it starts to go sideways, and more liquidation pools form below. What's curious is that it gives this fake out, seeking approximately $500 million in liquidations, and then returns to its downtrend. So it's very important to observe this chart after you identify which regions the price is potentially in. And a theory I really like is basically the theory where you identify the regions of accumulation, reaccumulation, distribution. Initially, you can do this by doing visual analysis, which in itself is easy, but there are very interesting metrics for us to identify this, which is the buy-sell pressure delta metric. We start to see here that it's a potentially accumulative phase, that they are selling, but quickly the market goes back up, and here they are possibly distributing. This fools many traders because they feel totally lost. They feel totally lost, mainly because of narratives. You start seeing billionaires declaring massive purchases in Bitcoin, lots of positive news regarding politics, that Bitcoin is the current currency, it's the currency of the future. Documentaries start to emerge about Satoshi Nakamoto, that it's the revolution of the century. Yes, Bitcoin may be the revolution of the century, but there is also an excess of marketing promoted by large funds exchanges. But in reality, this is just to attract retail liquidity, exactly in a distribution phase. Notice that here the market was weakening, meaning supply was being much higher than demand. And then fake outs appear, seeking residual liquidity, fooling the last traders, when in reality it's the beginning of a downtrend. And this downtrend is not over. For it to end, we have to see a very rapid change. And this very rapid change, I only believe when it reaches at least 1 year of decline. Even if I didn't want to accept that this chart will continue to repeat, but yes, it probably will continue to repeat. So, understanding that there is a necessary time for these accumulation and distribution phases to give a continuation up, it is necessary to also identify that this mathematical fractal exists, which is curious. But even better than that, identifying where the liquidity is. And for you to take a look, we can even do long-term analysis, 2 years, 4 years, or more, and see that it's the same thing. It's quite curious. For example, here, many short liquidations happened after, right, Donald Trump's victory in the United States. But then the market starts to get overloaded with long positions. The market pretends to fall. It takes the last short liquidity. Here it creates false optimism because it broke the previous top. But most traders are not seeing that down here there is a lot of money to be liquidated. And look what happens. It's a very fast speed. The price falls as if it were an elevator without a cable. After liquidating most of these traders, it continues its cycle, moving from accumulation, reaccumulations, and starting distribution. At the all-time high in October, notice that it did exactly something very similar here. It broke the previous top, generating the false sensation that it will have a continuation up, but traders were not seeing that there is plenty of money down here. And look what happens to the price. That's why I make some posts and it ends up bothering many people, because I feel that sometimes I have an eagle eye because I am going through various types of analysis, from fractal analysis, which happens from the 1 minute time frame to the monthly time frame, institutional analysis, buying and selling pressure, and also where the liquidation levels are. So this gives you an extremely powerful decision making. Regardless of the time frame you add, you will notice that at all times, people are being liquidated. And there's no use going against it. No use. The market will always continue to liquidate people over time. It liquidated in 2024, it liquidated in 2025. People will always be liquidated. And to conclude the video, I'll even bring an insight here on Ethereum as well. Ethereum was not much different. Here I have the chart of the last year. So while Ethereum was breaking its all-time highs, very close to $5,000, look who was down here. Huge liquidation levels. And these traders started to get liquidated day after day. And even if it falls a lot, traders start to build a conviction that the market has already fallen enough. It will come back. But no, more liquidations emerge. It's quite curious. A good summary here for Ethereum is that it has already liquidated quite a lot. See that over the last 2 years, it has been liquidating many traders in an extremely accurate way. And the good sign is that we are probably in the last big liquidation pool. This opens room to accumulate, meaning you have to accumulate. Think about buying when traders are highly liquidated. When many traders are liquidated, that's where we have to think about accumulating. So guys, I leave this video here not just as a summary of what I'm seeing in the market, but also as a reflection that everything is a decision-making process based on data. We have to be careful with decisions based on emotions. So I will continue to bring views of institutional, fractal views, liquidation views, because that's what moves the game. It's the game of liquidity. And we have the privilege of having a lot of data to make these decisions. Thank you very much and see you in the next video.